two very easy and simple trading strategies that you guys can pick up pretty much however, it doesn't matter how much experience you guys have. You guys can start trading these trading strategies right away. So I'm going to touch on what you guys need and then how to trade these strategies. So we'll hop right into what you need for these two trading strategies. So you're going to need four things, okay? You're going to need three indicators and then another website called Currency Strength Meter. So Currency Strength Meter, I actually just posted a video on it with my last video. So I will link that video in the description. You guys can go watch it. It's really short and it's really simple. But it is important that you guys know how to properly utilize this website. So I very highly suggest that you guys watch that video. But moving on, so you have your currency strength meter and then you have your three indicators, okay? So your three indicators that you're going to need, your first one is called moving average, okay? So if you go into indicators and type in moving average, it's the first one that pops up here. And the only thing that really is necessary to change here, so if you double click on the moving average, under inputs, you're just going to want to change it to 50, okay? And then if you want, you can change the color and like thickness here and whatnot. But so the only thing you're really going to want to make sure you change is this to 50. So the next indicator you're going to want to use is Bollinger Bands. So the one I suggest you use is if you go into indicators and you type in Evan Cabral. It's Evan right here. Sorry, Evan Cabral, and you just do the first one here, Evan Cabral binary strategy. It'll look something like this. Okay. So here are your Bollinger Bands. So you have Bollinger Bands and estimated moving average. You don't necessarily need to change anything in terms of inputs here. You can leave them all the same. So last indicator that I recommend you guys use is called DMI stochastic. So if you go into indicators and type in DMI stochastic, it's right here, just under tracks. So these are the three indicators that you guys are going to need, and as well as your external website, currency strength meter. So quick overview of the two strategies we're going to touch on is the first one you're going to be trading in a consolidating market, and the second one you're going to be trading in a trending market, okay? So we'll start with the consolidating market. So if you go over to AUD CAD here, as you can see, we have some fairly strong support and resistance lines going here. And this tells us that it's obviously in a consolidating trading market. Now, what you're going to do is, as soon as you see a consolidating market with good support and resistance lines, you're going to want to pull out your horizontal ray here and just mark those guys down. So I'm going to put my first one right about here. And then my support line I'm going to put down here. Okay, so we have our support and resistance lines down. Now what you're going to do when trading a consolidating market is you're going to wait for the candles to hit either the resistance line up here or the support line down here. So that's going to be your first confirmation. So your second confirmation is you're going to want the candles to pierce the Bollinger Bands. So as you can see, it pierces the Bollinger Bands here, 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 but it doesn't hit the resistance line. So you're going to want that double confirmation of resistance line as well as pierces the Bollinger Bands. And so your third indicator is going to be your DMI stochastic here. You're going to want to wait for the pair to enter the oversold area and then exit it, giving you the sell indicator. As well as sometimes the Bollinger Bands have built-in buy and sell indicators, right? So right here, the green up arrow would be a buy indicator, as the red arrow would be a sell indicator. So overall, we have one indicator here being the support and resistance, two indicators being the Bollinger Bands, three being the DMI stochastic, four being the sell indicator here. So realistically, at this point, when it has pierced the Bollinger Band as well as hit the resistance line, shortly after, you would have gotten a sell indicator, so that would have been a perfect place to place a trade. And then as you can see, you would have been successful here. Now, one thing I want you guys to keep in mind while doing this is you want to see how fast the market is moving, okay? So if I take out my drawing tool here, if the market is a consolidating market, but it's moving like very fast like this, you're going to want your trades to be shorter, okay? So within the 4 or 5 minute, 6 minute range, right? Because you don't want to place a trade here and then have it still going on when it's coming back up, right? You want to realistically end your trade at the lowest point possible. Now, if the market is in a consolidating market, but it's nice and slow and it's not really moving anything fast, that's where you should be placing your longer trade, right? Because let's say you place a trade here, you want your trade to end at least below this point, right? So you would want it to end at least here. So you want to place longer trades. And then I'd recommend, once again, depending on how slow the market's moving, recommend anywhere between 10 to 20-minute trades. And then last thing I want to touch on is the currency strength meter for trading the consolidating market technique. So right now we are on AUD CAD. And if we go here, AUD CAD should be a consolidating market, so that's great. But let's say you're in a consolidating market on TradeView and you're trading AUD JPY, which happens sometimes. So your AUD will be a very strong pair, while your JPY will be a very weak pair, and the market will still be consolidating. My recommendation is to stay away from trading that. Okay, even though the market's consolidating, it can get very unpredictable when this happens. It could go in an uptrend at any time, even though it's in a consolidating market. So last thing I just want you guys to check while trading this consolidating market technique is your currency strike beater. Make sure that your pair, like we're trading AUD CAD right now, make sure your pair says it should be in a consolidating market, which it should be. Both pairs are 6 bars. And if it's not, if you're trading AUD JPY where you're having a 6 bar to 2 bar and it's still in a consolidating market, I would recommend staying away from that. Okay, so our last technique I'm going to talk about here is trading in a trending market. So as you can see, we're trading Euro AUD right now. So a 2 bar to 6 bar ratio should be in a downtrend, right? So Euro AUD, it is in fact in a downtrend. So the trade setups you'd be looking for here is you want to be trading on the pullbacks, okay? So what a pullback is, I'll quickly draw it out for you guys. So let's say you're on a downtrend, right? So this looks about what a downtrend would look like. The pullbacks are these guys here, where they temporarily go in the opposite direction before continuing down on the downtrend. This is where you guys are going to want to be trading, okay? So if I were to point out the pullbacks here, it would be like this guy, this right here, as well as we're temporarily in a pullback right now. So the confirmations you guys are going to want to be looking for here is when in a trending market, it's kind of the opposite as a consolidating market. You don't want it to be piercing the Bollinger Bands because as you can see, when it's on a downtrend, it's constantly piercing the Bollinger Bands. And then in these pullbacks, it's no longer piercing the Bollinger Bands. So your second confirmation is your DMI stochastic. Before you place your sell or buy, you want it to be in the oversold area. So as you can see right here is a sell indicator right here and here. And then my last recommendation for a confirmation is going to be your estimated moving average here, okay? So it's not really a good example here, but if I scroll back a little bit, you can see while on the downtrend, a lot of the times it's bouncing off of this moving average, right? So it's going up, it's reaching the moving average or close to it here, right? And then it's going back down, and here it pierces it. But as you can see, if we continue down, it bounces off and continues going down. So when you're able to recognize that the market is moving where it's coming close or in fact touching the estimated moving average and bouncing off, the optimal point would be like right here. So we're on a downtrend, right? We're experiencing a pullback. It's no longer piercing the Bollinger Bands. It is in fact bounced off the moving average as well as it's in an oversold market. So this is one confirmation, the pullback. The estimated moving average is 2. The no longer piercing the Bollinger Bands is 3. And the oversold market indicator is 4 confirmations. And as you can see, if you were to place a trade realistically, like anywhere around these 3 candles, which would have been a good trade, then you would have won the trade. And you can see a lot of times on these pullbacks, like here, if you would have done the same thing, you would have won the trade. Here, you would have won the trade, right? So it's all about making sure you have as many confirmations down as possible before you place the trade. Now here, I don't know if I'd make this trade. It is a little risky because the estimated moving average is no longer close to the candles. But that being said, there was a lot of good trade potentials down here. So lastly, when trading this trending market technique, once again, you're going to want to do the same thing as the consolidating market for the currency strength meter. You're going to want to go onto your currency strength meter, check the pair you're trading, Euro AUD. You're going to want to make sure, in fact, it should be in a trending market, which 2 bars to 6 bars is a confirmation that it should be in a trending market. So sometimes the bars will say that they should be even or that in fact the trend should be going in the opposite direction, and that happens sometimes. So in those situations, I would recommend staying away from trading that pair currently. So these techniques are all about providing multiple indicators and confirmations for you guys to use and making sure you have as many confirmations as possible before placing that trade. If you're placing trades where you're getting 3 or 4 confirmations every trade, I guarantee you'll be very successful. They might not come around as often as trading 2 or 1 confirmations, but you will definitely have a higher success rate in your trades. Anyways, guys, that's all I wanted to touch on here. And actually, as you can see, I had mentioned we are in a pullback at the beginning of my explanation here, and as you can see, it's dropping down again. We didn't have the estimated moving average with us, but we had lots of other confirmations too, right? Like we had, it was no longer piercing the Bollinger Bands. It was in an oversold market. It was in fact in a downtrend market, as per the currency strike meter. So as you can see, if at the beginning of my explanation, if we would have placed a trade, it would have been a successful trade. But either way, guys, thank you so much for listening. If you guys have any questions, my email as well as Instagram will be in the description. You guys can message me on those and ask me any question you'd like, or as well just leave a comment. That works too. But thank you guys so much for watching this video and have a good day.